Hello and welcome to the Chilled Investor. This is not financial advice. Always do your own research. In today's video, I'll be reviewing Unilever. So the first thing we'll do is look into the dividends. So when we have a look, we're showing at 3.7%, which for me, that's pretty poor to be honest. But then we look at dividend cover, and we see the dividend cover is approximately 1.5. So that's not too bad, it's quite reasonable. And then we've got to look at how often they pay, and as we can see here, they typically pay 4 times a year, which I really like that. That's really good for me. So the next thing we're going to look at is what the dividend rate is, what they pay, how often they pay it, sort of thing, how it increases over time, if it increases over time. So for this we look at the annual dividends, and we can see on here it looks like it generally trends upwards. We'll have a look, and as you can see over the last few years it's down one and then we're up most of the time. We've had a couple of spates where it's been down here, look, but generally speaking it's up. So overall the dividends, while the rate's not that great, the actual frequency of paying it and the fact that it goes up is quite good. Okay, next we're going to look at the financials. So once it loads up, here we go. So when we look at the financials, first thing we're going to look at is revenue. Now the revenue has decreased for 2018, and then we've had an increase, a decrease and an increase, but generally speaking they've all been around about similar levels. Even though it's quite a few million difference, it's actually not bad at all, that. And next I'm going to be looking at the profit. Now this is the profit after tax from continuing operations. Now as we can see here, we've gone up for 2018, and then we've took a bit of a dive for 2019, and then slowly recovered and recovered somewhat more as well. So overall that seems quite reasonable. And now we're going to take a look at the assets. So first off we're looking at non-current assets, and I'm just going to look at the bottom line of all the non-current assets together, which as we can see has gone up from 43 billion to 45.5, 48, 51.5 and 57, just over 57.5, which is absolutely brilliant. That's what we want. And then we look into the current assets, and as we can see, similar sort of thing, not as big a differences though. We've had a drop in 2019, that is, yeah, we've had a drop in 2019, and then it's recovered for 2020, a little bit of a drop off, and then it's recovered again. But these are current assets, so these are things which, you know, tend to move reasonably quickly. And next we're looking at liabilities. So our current liabilities, we've started at 23 billion, dropped down to 20, almost 21, dropped back down to 20.5, and then we've jumped up in this last year to almost 25 billion. So we can see that's quite a lot, and it's over 40% of the current turnover, which is quite substantial. And then we look at our non-current liabilities. Now as we can see, they've gone up year on year, except for 2020 where it dropped a little bit, which is positive that it dropped, but unfortunately it jumped straight back up again. So they've got quite a lot of non-current. Now it's not too bad non-current, because it doesn't have to be paid in the next 12 months. This could be like long term, so like if they've got mortgages and on properties and such, like where they might be paying over 20 or 30 years, so it's not an immediate impact, not like the current liabilities. So it's not too bad. I'd rather it be going lower, but you know, if they're making investments, it is going to raise a little bit. And next we look at equity. So really we want to see equity building, and as we can see, it drops in this year and then it built up again to there, and then we're on 17.5 billion on this year and 17.75 billion here. So really that's the sort of trend we want to see, where it's continually building. That gives us good confidence in it. After totting everything up, Unilever comes to 59 points. A very strong, stable company, but a company that doesn't pay a high dividend percentage, but they are very reliable. If you found this video useful, please think about subscribing. And if you liked the video, please give it a thumbs up. If there's anything else you want me to discuss, stocks and shares related, please feel free to drop us a comment and I'll see what I can put together. Thanks for watching, and I'll catch you next time.